All right, the opening bell hasn't even rung yet, but the market is already buzzing. We're talking about the pre-market, that critical window before the main session opens. So we're going to do a quick, rapid-fire briefing on 5 stocks making major headlines, giving you everything you need to know right now.
So, what's really moving the needle today? Well, we're going to see how everything from high-tech product rollouts to huge regulatory decisions and, yeah, even mega yachts are creating some big winners and losers before most people have even had their morning coffee. Okay, let's get straight to it. Our snapshot today covers a mix of giant, household names and some smaller companies, each with a pretty fascinating story unfolding this morning.
First up, 2 of the biggest players in the entire game. You know, when these titans make a move, everybody pays attention. But here's the twist. Today, they're heading in completely opposite directions.
And really, this sums up the whole situation perfectly. On one side, you've got Apple hitting a bit of a snag, and on the other, its key supplier, Taiwan Semiconductor, is getting some absolutely fantastic news. It's a classic study in contrasting fortunes.
Let's start with Apple. So, reports are coming out that the company is actually scaling back production of its super-hyped Vision Pro headset. It looks like sluggish sales might be forcing their hand, which is a sign that turning this futuristic gadget into a mainstream hit, well, it's proving to be tougher than they thought. And this isn't just about one product. It's kind of a litmus test for the entire high-end VR market.
And how's the market reacting? Well, with a modest dip of 0.5%. Now, that's not some catastrophic drop, but for a company the size of Apple, it's a clear signal that investors are watching the Vision Pro story very, very closely. Okay, now let's pivot over to Taiwan Semiconductor for a totally different story. They just managed to secure a crucial 1-year U.S. export license. And this is a huge deal. It lets them bring essential American chip-making equipment into their factories in China, which clears a major geopolitical hurdle. And why does this matter? Because it brings a little bit of stability in the middle of all this tech tension between the U.S. and China. And boy, does the market love that kind of certainty. You can see it right here in the numbers, a really solid 2.3% gain in the pre-market. It's a perfect example of how navigating those tricky international regulations can give investor confidence a real boost.
All right, so if the moves in big tech were just ripples in the water, what we're about to see in the small cap space, smaller, higher risk companies, is more like a tidal wave. So buckle up, because this is where the real drama happens, where news can have a massive, immediate impact. Our first case study here is Outlook Therapeutics. It's a biotech company that just got hit with, well, some really devastating news from the Food and Drug Administration, the FDA.
Now look at the language here. This is the key. It's a direct quote from the FDA's letter, and it's not a maybe or a try again later. For a company that's banking its future on a new drug approval, these are pretty much the most feared words in the business.
And the impact? Absolutely brutal. I mean, look at that number. The stock just cratered, plummeting over 63%. It's a stark reminder that in the high-stakes world of biotech, a single decision from regulators can make, or in this case, completely break, a company overnight.
Okay, but from that massive loss, let's completely flip the script and talk about a surprising huge win for another small-cap stock that just went soaring. Yeah, you heard that right. Rubico Inc. announced it's buying a company whose main asset is a contract to build a brand new mega yacht. It is definitely not every day you see news like this, and it's a great reminder that the things that move markets can come from the most unexpected places. And investors absolutely jumped on board. The stock shot up over 40%. What a wild contrast to our last story, right? It just goes to show you the incredible volatility and the totally different kinds of stories playing out in this corner of the market. All right, so we've gone from the unexpected to the highly technical. Our last small cap, VS Media, has a different kind of story. Their big news isn't about a product or a deal, but about a fundamental change to the stock itself. So they've announced what's called a 1-for-20 share combination, or a reverse stock split. Basically, think of it like this. They're taking 20 of your old shares and swapping them for one single new higher-priced share. Now, this can make the stock look more appealing on paper, but honestly, it's often a move struggling companies make to keep their share price up and avoid getting kicked off an exchange.
So, after all that, what is the bottom line? We've seen 5 very different companies with 5 incredibly different stories. Let's pull it all together into one simple snapshot.
So here's the scorecard for the morning. You've got Apple with its product struggles, causing that little dip, while TSMC gets a solid boost from its regulatory win. Then you see the really dramatic swings. Outlook collapsing after that FDA rejection, and Rubico soaring thanks to a mega yacht deal. And finally, VS Media with its structural stock change. You can see how every single line tells a powerful story of cause and effect.
And that really leaves us with one final thought. We've seen the calm, relative stability of the tech titans, and we've seen the absolute Wild West drama of the small caps. We've seen how innovation, regulation, and even just plain weird corporate strategy all play a huge role. So the question is, in this market of incredible highs and devastating lows, where do you think the real story is being told?